Hey there, I'm Jeremy of J Wells Tax. This is my first live broadcast here, trying out new things, experimenting. So we've got a couple people joined up here. I just wanted to take a moment here and throw out what is, I think, a pretty big announcement. And if you follow me on Twitter or, excuse me, X or Facebook, you may have already seen this, but I just want to make sure everybody here on Substack sees this as well. We're organizing. I'm organizing, but with hopefully the help of some others, a tax book club. So I know this is a busy part of the year for us, but when better to connect with our colleagues and talk about some of these difficult concepts that we deal with. And so just wanted to put that out there to the Substack audience as well, putting together this tax book club. I'm going to send this video out in a post and have a link to be able to join that book club. But before I get into that, I just want to say that the reason I wanted to do this is, like I said, I want us as colleagues to be able to come together to be able to do more than just sit through some lectures, sit through some continuing education events. Those are important, those are valuable, but we need to take it upon ourselves to dig a little bit deeper and to have some conversations among ourselves. And I think one of the best ways to do that is through getting together and discussing some of the stuff that we're reading. And so this is an idea that I've had for a couple of years now, really back during the pandemic, started tossing it out there. Nothing really ever happened with it. A couple of weeks ago, a conversation started on Twitter about a particular book, and this is going to be the first book that we talk about in the group. And I'll bring that up here in a little bit. But there seemed to be a bit of interest there. So about a week ago, I put out a form, very simple form. People could add their email address if they were interested in this group. We're closing in on 70 people that have expressed interest for that. So and that's just looking at uh, X and then Facebook. So I think there's some merit to the idea here. And again, these are people knowing that it's clear there when they're signing up that we're talking about starting this here in the next month or so. So these people aren't letting tax season hold them up. I've gotten that comment back. I'd be sure to join after April 15th, and that's fine. I understand. We want to get our work done as quickly as possible, and we do have to deal with these deadlines. The workflows in my firm, I'm blessed to have a firm and a business partner where we're stretching that work out throughout the year, and so we're not really compressed around March and April. But anyway, we're going to launch that here in a couple weeks and get that going. Start talking about a particular book. But first of all, I want to kind of lead into that. One of the things that I want to try to do with this book club as we're going through these discussions is think about some of these old practices, think about some of these ways that we've always done things, and kind of start challenging that a little bit. So, for example, I was taught when you're working with a partnership, always get a copy of the partnership agreement or a copy of the operating agreement, and I think that's good advice, only I didn't ever really know why. I knew it was important. I knew getting it, there were a couple things you can glean from that are important for the return right off the bat. How much did everybody contribute to the partnership? How much is everybody's ownership percentage? Are we going to split up profits and losses differently? All of this kind of stuff. I know that's basic there. But I've also heard tax professionals talk about you should actually read the operating agreement or the partnership agreement. You should understand it. You should talk to the partners about it. And so I wasn't sure if this was something that I should just passively do, just make sure we've got a copy of the operating agreement on file just in case. Is this a CYA thing? Or, am I actually supposed to read this? Am I supposed to think about it? Is there something that I need to be looking for in here? Is there something in that operating agreement or partnership agreement I need to be questioning the partners on, pushing them on? Do I need to tell them to go back to the attorney and rethink some particular line in the operating agreement? I never really understood that part of it. I just knew we were supposed to have a copy, and it was good to have a copy on hand. But it's a legal document. I'm not an attorney. I'm just a tech professional. What am I going to do with this agreement? Uh, Hold that thought for a second, though. I actually recently joined a tax pro education service, I guess you would call it, as a mentor. I'm one of their mentors now, and I've been filling in. Uh, on that for sorry, I've got to put in my password, unlock my computer here real quick. I joined as a mentor. I've been filling in for one of the other mentors for past couple weeks now, and this just yesterday, a question that came up was partnership capital accounts. Are we required to keep and track capital accounts? Does this need to be on the balance sheet on the Schedule L? Does this need to be on the K1? And this was another thing that I kind of had to think about for a minute because the way I always thought of capital account was it's book equity for the partners. In fact, a lot of times it's been explained to me, and I've turned around and explained to a lot of my colleagues that there's a big difference between capital and basis. And just because they might be the same number, they might have the same value, they're different concepts. And as tax professionals, we're worried about basis. Basis, outside basis is what we're going to use when we look at things like the gain or loss from the disposition of that partnership asset. We're not going to look at capital account for that. So I had always just kind of assumed this was an accounting thing, and sure we can put it on the return, but I didn't really know as a tax professional why we were so worried about capital accounts. So I started digging into that to be able to answer this question. Should we be reporting capital accounts? Do we need to worry about that? It turns out, yeah, they're actually pretty important. Generally, yes, partnerships have to report those capital accounts. There are a few. There are a couple of exceptions. It's question four on Schedule B on the 1065. If you meet those three or four criteria, if it's a relatively small, simple partnership, then they're not required to report the capital account. Even then we would still report it. But again, the point was I didn't really know why. I just knew it was a good thing to report the capital account. Beyond that, I didn't really know why it was important. So as I was digging into that, this concept that I had heard of before, but it didn't really click when it did, this concept of substantial economic effect came up. And this is in a really complicated part of the regulations. It's mentioned in section 704, but then to really understand what it is, you got to dig deep into those 704 regs, and that's some of the most complicated part of the regulations really in all of the tax code. I mean, when you open up a section of the regulations and there's a table of contents that you've got to scroll through, you're in for some complicated tax law reading there. So started getting into that, realized that really the crux of this concept of substantial economic effect ties back to, are you maintaining capital accounts? And when we have a partnership liquidation, we're going to go back to the capital account to figure out what the gain or loss is. And if we just sort of imagine that liquidation happening, that's going to clue us in to whether a deduction or a loss being passed through to a partner today has this substantial economic effect, even if we're not planning on liquidating the partnership. And it really just started to unfold, right? These are important concepts. Well, you know, where did I go to start figuring all this out? What finally made it click? Because I'm not afraid of the code and the regulations. I'm not afraid to jump in there and start reading the legalese and trying to tease things out. But some of this stuff, it's just I don't care how long you've been doing this. I don't care how smart you are. Some of this stuff is just dense and we struggle with it. And there wouldn't be so many tax court cases and Supreme Court cases and litigation and PLRs. There wouldn't be all of this if it was simple, right? If it was straightforward. And so, we've got to have some ways of thinking about these things and figuring them out. And I just don't think sometimes, just a 50-minute lecture or even a 100-minute lecture is really going to break this stuff down to a degree to where we really get it. So again, continuing education is important. I think there's a gap there. So, when I really needed to figure out the answers to some of these questions that I was about to go teach on, yeah, I started Googling it, of course, and that inevitably leads to some tax advisor articles. I use a research service, Parker. It's not bad. I've also used tax notes before. There was some helpful discussion there. Really, when it started to click, though, and I ordered this book a few weeks ago, and I've been slowly making my way through it. This is The Logic of Subchapter K. This is a book I've heard about for a few years. Some smart people that I've taken some continuing education from and that I've relied on for questions I've had over the years. Whenever it was a partnership question, uh, one in particular, whenever I was on a call with him asking a question, he would reach behind his desk, he would go to his bookshelf, and he'd come out with a copy of this. So a few weeks ago, I broke down and I said, you know what, I need a copy of this book too, right? If I'm going to be serious about working with small businesses, some of those small businesses are going to be partnerships. I hear this all the time. I hear tax pros say, yeah, partnerships, not so much, right? Like S corporations, I'm fine with. Schedule C's are great. You don't even have to do a balance sheet. All kinds of reasons for why those returns are fine. And then you bring up 1065s and they just kind of a recoil. I don't want to be like that, right? Not that, I'm doing any real complex partnerships. We're definitely not working with any kind of, tax shelters or any of that nonsense. Really don't want to have anything to do with that. But as far as just some, basic three, four, five people partnerships, maybe a few real estate investors get together, they each contribute some property, and now they're running a partnership together. Very quickly, those things can get more complicated than you really want them to at the outset. And, I just want to make sure I'm prepared for those kinds of things. Or, the flip side of that, even if it's not a current client, I want to be able to talk to prospects as they're coming to me and they're either starting, some entities like this, or they're contemplating it. And I want to be able to walk them through, what that's going to look like. And so this is something that, like I said, over the last couple of weeks, I'm uh, reading it. I'm trying to take this more seriously, trying to really understand what's happening here and wanted to share that with my colleagues. So that's going to be the first book that we start off with in our tax book club. And this is an informal group. There's no cost to join, nothing like that. We're going to use a free service to kind of organize and plan all of this. That's all going to be clear in what I send out as far as how to get signed up. But this is going to be the first book. We'll probably start talking about it. We'll spend some time breaking it down. Probably break this up into a few chunks, a few meetings, go through it. But that's it. That's basically what I wanted to talk about. I wanted to get on here and announce that to people on Substack that this is going to be something we're going to do here in probably a few weeks is when we'll get started. I put together a sign up form that's been available for a while, and so I'm going to move all of that into a different program that's going to help us run this book club. Again, it's going to be very informal, absolutely no cost to join. It's completely voluntary and no continuing education, obviously, none of that kind of stuff. But I think it's going to be a really good opportunity for us to get together to talk, and we'll probably spend I don't know, a few meetings on this, probably over a couple months, and trying to break this down. Want to make sure it's flexible. Want to make sure it's accessible for people, and then from there, I think we'll just move on and pick a new book, and probably take a month or two off, and give people an opportunity to figure out a new book, do some polling. I've got some ideas for some other books that I've been wanting to discuss with my colleagues, but anyway, this is the one we're going to start with. Like I said, it's already been out there on Twitter for a little bit, as well as Facebook, X, and Facebook, that we're doing this. Want to bring this to the Substack crew. So if you've got questions about that, feel free to reach out and let me know. But like I said, I'm going to put together a post, send out this video with a link of where to go to join up for that. And this is pretty much my first attempt. I do want to make this a regular Tuesday thing if this is helpful. It'll probably be less promotional kind of stuff and more just actual discussion. But yeah, so for those of you who actually decided to join today, thanks very much. Appreciate you hopping on. And yeah, appreciate you subscribing. Appreciate you following me on here as well as elsewhere if you do. And feel free to reach out. Would love to get in touch with you if we haven't already. And if you don't have a copy of this already, whether you want to join, this book club and discuss it with some colleagues or not, no, no worries there. If you two are planning to be pretty busy the next few months and just not sure how to fit that in your schedule, I totally understand. But I definitely would recommend picking up a copy of this. The authors, the Cunninghams. They're a couple of attorneys, but my understanding, as I've been told, they have retired recently. This edition is the sixth edition. It came out in 2020, so it does include 199 Cap A QBI. It does include the Bipartisan Budget Act, so it does have that updated CPAR and the rules that different from the old TEFRA rules. So that's included in here. Uh, Anything since the pandemic is not going to show up in here, unfortunately. But there hasn't been a lot of change to Subchapter K in particular. But this my understanding is that the two authors have since retired, and they probably won't be updating this any further. So if we're going to read this, we're going to use this to understand it. And I've looked around and seen if there's something comparable to that. Of course, there's a lot of textbooks on subchapter K and partnerships and that sort of stuff. This is it's not quite textbook-ish, but it's there. I mean, this is assigned to law students, that are learning tax law, and so it does get kind of technical, but there are some really great examples sprinkled throughout it that help break some of these concepts down. And as much as you would expect two law professors to just write and talk like normal human beings, they get pretty close. Like I said, I'm not an attorney. I'm not even a law student, but this seems accessible to me. This has helped me understand just the workings of partnerships, how partnerships operate a little bit better. So I definitely think it could be helpful to us as tax professionals to read this. It's not as much on the legal side. It's very much on the tax side. So it is things that as you're reading it, it'll help you understand why things are done a certain way on a 1065. They don't talk about the forms. This is not like an NATP journal article where they show you the forms and they fill them out by hand. It's not that. It's not to that degree. It's not showing you how to prepare a 1065 or a K1, but it is showing you the logic behind why things are reported the way they are, which is going to make it really great when it comes to advising clients who are either operating partnerships or thinking about forming partnerships. So, again, I think this is really important for tax advisors to read if you're working with small business owners, and I'm really looking forward to the discussion that we're going to have with this. So if you can join, feel free. Like I said, I'm going to send this out with the information of how to join up with that. If not, feel free to reach out, and if you get a copy of this and you read through it, would love to just talk informally about that as well. And of course, if you got any questions or anything content wise that you would like to see coming out of the what I send out, I've got some ideas. I've got some articles in the works and posts in the works. But again, this is a format that I'm looking forward to adding into the mix. Right now, the plan is to come on here, just do 20, 30 minutes every Tuesday afternoon, see how that works out, but we'll go from there. Again, thank you very much for subscribing. Thanks for tuning in today, and feel free to reach out if you've got any questions or you just want to chat. Thanks. Have a good one.